Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Wednesday, August 7th, 2019, and we find ourselves again in the final hour of the trading day. As many of you know, I believe that the closing prices of the day are the most valid prices because that is when the market makers and the large financial institutions take over the market. And I'd like to be in the company with those guys. So that's why I feel like the closing prices are the most valid prices, and those are the prices that I like to make my buying and selling decisions from. So I hope everyone's doing well, and thank you so much for coming and visiting with me today and investing your time. I hope you get a good return on your investment if you watch this channel on a regular basis. Market's pretty crazy. We were down huge earlier, just huge. And we've actually made almost all of that back. The Dow is now down only 54. I think the Dow was down close to 500 at one point. NASDAQ is actually green on the day, and the S&P is just about break even. So it's been a pretty wild week, huge swings, a lot of fear, a lot of drama. So let's see if we can navigate this today. Hey, Steve Burns is here. How you doing, Steve? Good to see you. Thank you for coming. Steve says volatility is basically when the market goes around in a circle as fast as it can just to end up where it started. Yeah, that's a good analogy, Steve. That's exactly what's happened. Steve says, what a wild day and still an hour to go. Yeah, I know. I wouldn't be surprised by anything that happens today at all. Murat says, hi all. Hey, Murat. Good to see you from from Norway. Steve says, Dow Jones 550, I think, at the low. Yeah, I think it was down there somewhere. Just incredible. Just incredible. You know, there's a lot of drama going on with China. There's conflict between Pakistan and India. Of course, all the stuff always going on with politics. And it's just wild. Just wild and crazy. So, it's a good time to mention it's always important that you position size correctly because you don't know what's going to happen ever. And sometimes you are going to get punched in the face, and better to get punched in the face with a small position size than a big position size. Keeps you in the game. So, all right. Well, listen, the plan for today is, first of all, we're going to run the U.S. legal disclaimer. And then we're going to come back. We're going to take a look at my current positions, when I bought them, why I bought them, and how I'm going to manage them going forward. After that, we're going to do just a few minutes on some trader psychology. And then we're going to go through my watch list. We're going to take a look at all the stocks on my watch list one by one. We're going to take a look at the technicals. And the goal is to see if we can find some potential entries based upon indicators like RSI, MACD, moving averages, ATR channels, and ideally if we can find an entry that has maybe 1, 2, 3, 4 of those indicators lining up at the same spot, that would be the best. And then after the market closes, if you have any questions whatsoever about anything I discussed today, or if you'd like me to take a look at a particular stock, or you just have some generic trading questions, or maybe challenges that you're dealing with, please let me know, and I'll do my best to answer or help out in that respect. So, all right. I'm still a little foggy-headed, everybody. I've had the flu the last few days. You can probably hear it in my voice. So I'll see if I can manage to get through this again today. So be patient. It's been pretty brutal. So, all right, hang tight. I'm going to run that U.S. legal disclaimer, and I will be right back in about 40 seconds. Thanks.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
Okay, good. Got that out of the way. So, all right, well, let's get to it. Let's take a look at my first position and where I bought it and all that stuff. I did buy Amazon yesterday with a close over the 250-day. That is this line right here. This is a good back-tested approach based off of the 250 days. So you want, if the previous day closes below the 250 and then is able to close back above it, that's the buy signal, and you stay in as long as it's above the 250. However, if even the next day it closes back below the 250, that is your signal to exit. And you know, the winning percentage on this approach is not great, but when you do win, there's huge wins compared to very small losses. So, you know, if this closed below the 250 and the 250 today is 1783.47, it's a couple dollars below where we're at. You know, we'll take a small loss. We dipped our toe in, we tested it out, we paid a little bit of money to see what would happen, and it didn't go our way, and that's fine. And then if it just keeps on going down, we're not in it, right? But if it stays above the 200 and starts to trend, I mean the 250, excuse me, and starts to trend, you know, then we have all sorts of different approaches that we can use on the way up. You know, you can be creative, you can phase out, you can do all sorts of things. But the one thing you can't do is stay in when it goes below your stop. That's set in stone. You know, how you want to manage your trade going forward, whether, you know, you go from here and you get rejected at the 50 and then you call that good, or if you're going to say, okay, I'm going to stay in as long as it's over the 250. And then if it rejects the 70, that's another approach you can use, or just phase out until you're out of shares the way I do it. You know, doesn't matter. You want to put some thought behind it, but, you know, up is up, and up is making money, and down is losing money, and you want to nip that in the bud really quick. So right now, the end of day stop here is 1783.46. So let's just mark that 1783.46. But you know, trading really is that simple, in that let your winners run and cut your losses short, right? You have to have big wins, small losses in order for the math to work in this game. So we'll have to watch this one closely at the end of the day. But I did buy this yesterday at 1789, and I will stop out today if we close below 1783.46. So that's the plan on Amazon. Notice the word I use, plan. I have a plan, right? Whether it goes up or it goes down. And if you don't have a plan, you have no chance in this market, because you don't know what the market's going to do. But as Dr. Alexander Elder says, you know, you don't know what the market's going to do, but if you don't know what you're going to do, then, you know, you're screwed. You have to have a plan. So we'll see what happens with Amazon today. All right, so DDM, I did buy yesterday at 46.37. Same approach as Amazon. This is a good back-tested approach for DDM. When the previous day closed below the 250, that's a small little line here. That's the 250-day moving average. Also good that we bounced off the 250, but technically I'm not looking at that. I'm just looking at the 200. But we closed below, we closed back above. That's the signal. And again, if it closes back below the 250, I'm out for a small loss. If it stays above and starts to trend, then I stay in. And again, if it closes below the 250, you have to get out. That's just all there is to it. How you manage the trade going up is up to you. Whether or not, you know, you want to target a 50 RSI, and if it rejects the 50 RSI, get out, totally fine. Or again, if you say, okay, I'm going to just stay in this thing as long as it unless it goes up to the 70 and rejects the 70 and then get out, that's fine too. Or if you want to phase out, that's fine too. Another approach is I'm just going to stay in this as long as it's above the 250 forever. And then when it closes back below the 250, I'll get out then. Maybe it will be up here. You know what I mean? And that's how these back tests are actually figured. They're very mechanical. You're in above, you're out below. So, that's totally valid as well. You don't have to really do anything. Except for get out when it closes back below, hoping that that will be higher. But I do like to phase, but there's all sorts of different ways. I can't speak for Steve, but I imagine, if Steve took this trade and rejected the 50, he may get out, but maybe he wouldn't. Maybe he target the 70. I'm not exactly sure his approach there. So my approach is just going to phase out of this trade. When I phase out, I actually pick the 6 ATR channel up here, which when I get out in small little amounts. But if for some reason this raced up to here, yeah, then I'd be out of shares. But I would take that trade any day. So anyway, we are above the 250. We were well below today. I was like, oh man, that wasn't a good move. But it's fine. It was a good move because, that's the approach. That's the back-tested approach. But it has rallied. It has bounced off the 200-day twice. That's also positive, and it does look like currently, at least, it's above the 250. And the 250 here is 45.58. All right, so that's our line in the sand today. So we'll have to watch that one. That one's giving us a little bit more breathing room than Amazon. Okay, here is MasterCard. So I did buy MasterCard back here on the 5th of August. And the reason I bought it, we had two signals. One, we bounced off of the 100-day moving average, which was positive. Would I have bought this just because of that? The answer is no. But the reason I bought it is because we bounced off of the 100. That helps, but we also went below the 30 RSI and then closed back above the 30 RSI. What I also liked is this is Dr. Elder's approach. It's called triple screen trading. It takes 3 time frames. The monthly time frame, you can see that's the largest time frame. Definitely an uptrend, no doubt about that. The weekly time frame, which is a smaller time frame, right smack dab in the middle of the value zone. And so, when you have an uptrend in the large time frame, in the medium time frame, you want to see it come back to the value zone because that's generally the place on this time frame where you'll get some kind of bounce. So while it was in the value zone, I want to go to the quicker time frame to get me in quicker, and that was the signal back on the 5th. We rejected the 100. Oh, excuse me, everybody. I apologize for that, but sometimes it just happens. But on the smallest time frame, that's where we look for our entry. The bounce off the 100, the bounce under 30, over 30. And you can see I did hit 2 profit targets again today. I hit 2 or 3 yesterday. I can't remember now. Now, I targeted, with my phase out, I targeted the 50 RSI up here. So I have been getting out of, instead of 10% position sizes, I've been getting out at 20% position sizes because this was such a deep dip. So, if we were to get up to here today, I would be almost completely out of the position. I'm out of about 80% of the position right now. But if it continues, now, here's the 50 moving average, right? The pink line here is the 50 RSI. So if we were to fail here at this 50 moving average today, if we had a sell-off into the end of the day, I would go ahead and just lock that in and call it good. But I'll keep what I have left to see if we can move up even higher. So, if tomorrow we moved up above the 50 RSI, closed below, I would take my profits there. And if that happens, I'll probably be out of shares anyway. But this has been a really nice trade. I mean, so far in 2 days, from entry to the high of that trade, 4.63. So that was a pretty sweet trade. So again, My target is up here at the 50 RSI, and my trailing stop at this point will be a close below the 50 moving average. So did hit 2 profit targets today. So hope that makes sense. Hey Brian 512, good to see you. How's it going? Oh man, you sound worse. Do I? I feel a little better. But I think my voice is a little brutal. But man, on another subject, I'll tell you, this has been the week from hell. So first I get the flu. I'm watching 3 dogs. I'm watching my dog and 2 other dogs. One's a puppy, and then another one is a high-strung border collie. And 2 of the dogs don't get along. And it's like Mr. Mom, the movie. I mean, it's like every second of the day, I'm picking this up, doing this. No, right? On top of having the flu. And then this week just being crazy in the market. So I'm telling you, this week is a memorable week. Not feeling well, playing referee with dogs 24 hours a day, and then having this market happen. So anyway, hopefully things will settle down. All right. Merck. So we've been in Merck for a while. I did buy Merck back here on the 31st of July. And the reason that I bought it, we made this range here. We gapped up on earnings. We came back down. But, this was kind of an interesting buy here. The reason I bought it is it stayed above, this point here and this point here. This was initially resistance. Then we broke above it. And so this should hold as support. So normally I would not have bought this, especially with the price action on the day of the earnings, but I did buy it because the next day it still held above this support. We had a 520 a 520 moving average crossover, and we did go positive on the MACD. So it's been a pretty wild ride. We bought it here at 82.99. Right now it's at 84.33. I have phased out on the days up. I almost stopped out here back on the big day down, but it did recover and hold the 50, hit another, I think we hit a profit target yesterday. Today it was way down again and reversed back up. So no profit targets today, but as long as we stay above, I'm probably going to use the this is dealer's choice on this one. If you don't want to give it any room, you use the 5. If you want to give it some room, give it the 10, or if you want to give it some more room, give it the 20, or if you want to give it even more room, give it the 50. It's dealer's choice. Actually, I think I probably use the 10. So a stop below the 10 would be my signal to get out. But this has been a good profitable trade. We've been in this for 6 days. 6 days. So, and we just went positive on the day. So that is positive. All right. So everything's not too bad today. I mean, considering it was really red earlier in the day, and now it's getting close to break even. And here's SPY. So this was a real stinker. We've had a couple bad stinkers in the last few days. As people that listen to this channel know, I do buy the SPY each day at the end of the day. I sell it first thing the next morning. So I did buy yesterday at 287.80, and then I sold this morning at 284.40 for a whomper, over 1% down. But you might ask, why do you do that? It doesn't seem very technical, and yes, you are correct on the surface, but this is based upon a long-term study from Liz Ann Saunders at Bespoke Invest on Twitter. But since 1993, there's 2 options for this test. You could either buy the SPY, this is every day, you could buy it at the open in the morning, and you could sell it at the close every day. If you took this approach, buy in the morning, sell in the afternoon, you would have actually returned a 13.9% loss since 1993. But if you do the opposite, which I do, which is buying SPY at the close and then selling it the next day at the open. If you'd have done this each day since 1993, you would have actually returned 634.2%. Steve Byrne did a more recent study because this study was up to January 19th, but Steve Burns did a more recent study about a month ago where instead of 634.2, it actually moved up to 712.63% return. So that is why I buy this each day at the close, sell it first thing in the morning. And you can see it's not even close. The buy in the afternoon, sell in the morning, huge return. The buy in the morning, sell in the afternoon, negative return. So this is a very strong edge. It has drawdowns. You have to position size correctly. I mean, look here. This was a 2-year drawdown. Here was a 2-year drawdown. After 3 weeks, you're like, why am I doing this? Right? But you have to take the long-term approach on this. I mean, in May, I think, I probably lost 80% of my trades. And so, I'm glad that I was position sizing correctly and position sizing small so that, one, I don't get wiped out, right? If you have a bad run. And two, to not get destabilized about it, emotionally destabilized. So this is a good approach. It is a good edge, at least since 1993. So there are drawdowns. You have to look at the big picture. I've been using this since February 26th and up very nicely since I've been using it. So I'll continue to use it, and I will be buying the SPY again today at the close of the market. Oh, hold on one second. Gardner's here. I have to close the door. Hopefully the weed whacking and the mower won't be too loud. So, and yeah, I mean, obviously this one would have been a good one to hold on to. It's actually higher now, which is insane. But that's fine. That's good because we have our other long positions. So, all right. So that's it. Amazon. We're going to hold it as long as it closes over 1783.46, and now it's above. DDM, we're going to hold this based upon this under the 250, over the 250. Our stop at the moment is 45.58. MasterCard, it's doing great. If I rejected the 50 RSI to the upside, that will be my signal to get out. Or if we close below the 50 here, that will be my signal to get out. Merck has gone positive on the day, so that's great. I'm going to use the 10-day moving average as my trailing stop. And then SPY had that big loss today, but I will be buying this again at the end of the day. So that's the plan. I hope it makes sense to everybody. Steve Burns says, full-time trader and doggy daycare, my life as well. Oh, brother, man. Right? It's exactly what I feel like. I feel like a full-time trader, a full-time doggy daycare, and full-time doggy walking service. This could be a sitcom, Steve. You and I could be in a sitcom for traders and doggy daycare. Steve has a new puppy too, so. Hey, Frederick's here. Good to see you, buddy. That's Frederick from France. Always nice to have you checking in. Thanks for coming by. Okay, so listen, before we get on to going through my watch list and looking for potential setups today, I always like to do a little bit on trader psychology. I feel like it's the most important part of your trading game. If you're going to be a long-term successful trader, the difference is not going to be your setups. It's going to be your psychology and how you manage gains, how you manage losses, how you manage drawdowns, keeping yourself together, keeping yourself stable, making good decisions. It's all what happens between your ears. But I read this. This is from Thomas Payne on Twitter, at Trader T Payne. I really like Thomas's Twitter channel. He posts so many great things on trader psychology, and every time I read one of his posts, it totally speaks to me. So that's why I want to share this with you. But subscribe to his channel on Twitter and read all of his stuff, and hopefully it will start to sink in. But Thomas says, learning to trade is like putting together a 10,000 piece puzzle. And after countless hours of trying to put it all together, the final picture simply reads, manage risk. Isn't that good? And it's so true, guys. As traders, we're risk managers. That's really what we are. We're trying to let profits run. We're trying to cut losers short. And I've said this many times, but the only control you have in this market whatsoever, the only thing is how many shares you buy or how many contracts you buy. It's the only control you have. After that, it's completely out of your hands. Market could gap down 500 points like it did today. And if you have too large a position size and you get caught into some kind of vortex, then you're out of the game. You're never going to get the experience of becoming a good trader. I've said this before, but in order to learn a skill, you have to do it for a long time, right? And in trading, in order to do it for a long time to get that experience, you have to keep your money. So in order to keep your money, you have to position size correctly. That's the only way you're going to stay in the game. So, remember that. Each trade's one of the next 1,000 trades. Don't get too emotionally involved in any one trade. You don't have any control over it. Hopefully in the long term, you're trading a good approach that has an edge. But any one trade by itself is just a coin flip. So, don't get down. Don't get too up. Just position size correctly, because that's the only control you have. And rinse and repeat. Stick with your process. And in the long term, hopefully your edge is going to play out. But learning to trade is like putting together a 10,000 piece puzzle. And after countless hours of trying to put it all together, the final picture simply reads, manage risk. So, write that on your wall, write it on your forehead. I don't care where you do, but this is what it's all about, everybody, is managing your risk and taking the long view on this game. So thanks, Thomas, for that really good Twitter post that really inspired me, and that's why I'm sharing with everybody here. So, all right. Oh, Max, hey bud, how you doing? LMT hit my target today. I was saying it's strong. Yes, you did. I remember that when I was looking at that today, Max. Let's see, where is it? Here we go. Yes, it did. It did. It did trigger that V1. Did have a little bit of trouble with the 1 RSI, but good call on that one. Steve Burns says that tweet was 5 stars. Yeah, right? So good. It was so good. You're totally right, Steve. All right, well, let's get to it and see if there's anything looks decent today. So here's Apple. I read a study once that if you have a gap, if in 3 days after the gap, here's day 1, day 2. If within, and it can happen any day of the next 3 days, you close above the high of the gap down day. So here's the gap. Here's the high of the gap down day at 198.65. If within the next 3 days you're able to close above that, there's an edge to that approach. Not going to win every time, but there's an edge to that approach. So what I do like at the same time is, here's this signal, but what I do like at the same time is that we've been able to close under the 50 and back over the 50 as well. Yesterday we closed under, so that's a pretty good sign for Apple. Back tested, close under 50, close over the 50 is a pretty good back tested approach as well. So in addition to the close under, close over, we also closing the gap of the closing over the high of the low of the high of the gap up day. Here's the gap, here's the high, we went down. If this happened 4 days later, that doesn't back test as well. But if it happens within the next 3 days after the gap, here's day 1, here's day 2, then that's a good sign. So I am going to be looking at Apple today. AGQ. How about that, everybody? Up a mere 8.32%. Up a mere 8.32%. So, can I buy this here? No, I can't. It's too high. I need some kind of a reset. This was a V1 right here, but it happened above the 1 ATR channel, so I can't take that. So anyway, we bought this back here when the 5 crossed under the 20 and then back over the 20. And then I scaled out all the way to here. Then I ran out of shares. That was it. But had you mechanically used this with the 5 under the 20 back over the 20, you would still be in this trade. What a monster trade you would have with that one crossover. But again, after you take your trades, there's a lot of latitude how you want to handle them. And obviously in this particular trade, phasing out was not the right move. Just the buy and the hold as long as the 5 is over the 20 was the right move. But that's a massive day. Massive day today. So any of you have silver, congratulations. Advanced micro devices under the 100. Looks like we're battling with the 100 right now in the third ATR channel, but nothing there. Looks like might be able to keep our Amazon today, so that is good. We bought the under the 250 over the 250, so we'll be holding on to this. You know, this is somewhat interesting. We have had a V. At one point today, we did confirm a V1. Here's day 1. Here's day 2. Day 2 washes out day 1. If this were to close above 332.50, you know, what you have going on here is you have a rejection of the third ATR channel and a V1. It's not bad. It's a 3707 RSI. So if I targeted the 50, I'd have 13 points to the upside, and I would have 7 points to the downside. I think there's better, but you know, it's okay. You know, I'm just showing you this so I can show you a variety of different setups, but I don't think I would be taking this one. But we'll watch at the end of the day. Alibaba had a nice move up here. It's just too low for me. It's coming off this lower low. I would imagine that, you know, we get up to the 50 RSI, I'd probably be sold into, but who knows? But nothing there. Caterpillar, not doing much. It's a 30 RSI. It looks like it did reject the 30 RSI today, which, you know, is a valid signal. If somebody wanted to take that, you would just use a close below the 30. Let's look at the weekly. You know, it is testing. It is testing, getting close to testing this previous low back here. Yeah, I think it's better. The only thing you have here is to close under than close back over. Like, I like Boeing better, actually. We didn't close under the 30, but at least we went under the third ATR channel and narrowing in on a V1. So nothing there. DDM we have. Disney had earnings and it missed. It did bounce right off of the third 100-day moving average at the same time. I think it was a 33 RSI. So that would have had to been bought intraday. I don't do a lot of intraday buying, but obviously this one would have turned out pretty well. Now I feel like it's rejected the third ATR channel. It's a little chasey, so I'm just going to let Disney go, see if I can try to get it at a 30 RSI. Sorry. Etsy, nothing there on Etsy. Did trigger a V1. So that's good, but not enough. Ford did bounce off the under 30 back over 30. That turned out to be a nice trade. I didn't take that one, no. Nothing there for me today. Facebook, pretty good here in the fact that we have a higher low V1. Here's day 1, here's day 2. Day 2 washes out day 1. Day 2, it looks like it's going to close above day 1, and it also rejected the third ATR channel and rejected, and it's a higher low. So that's all. That looks pretty good there today. I'm actually just going to run the numbers real quick on this in case that's something I want to buy at the end of the day. All right. All right. So we will mark Facebook. Five Below having a big day today, isn't it? Off of that low, but you know, we've made a lower low. We've had a bounce. People that bought down here are going to be real itchy triggered to sell somewhere up in here to lock in those gains. So nothing on Five Below. Gold, massive day, along with silver. Same thing. We took this trade back here with the 520 cross. Was very happy. We took this trade here. We scaled out all the way to here. However, if you would have used the 520 cross mechanically, you would still be in this bad boy. Most of the time, a lot of the time, this doesn't happen. But I was still very happy with this particular trade in about a week's time. But nothing on gold. It's just too high. Google. So, we had this big gap up on earnings. We came all the way back down. We tested this previous high here. Today we have a higher low V1 in the channel over the 20, over the 50 RSI. I kind of like it. I kind of like it a little bit better than Facebook, actually, just because it's in the channel. Excuse me, everybody. If I do take this trade, this is the washout bar. This washed out here. I would use a halfway as my stop. So probably I'd just call it at the 100-day moving average. But it gives me this kind of risk with possibly this type of reward. So I am going to mark Google. Goldman Sachs. I was considering buying this yesterday with the close under, the close back over the 50. Earlier today, I was really glad that I didn't buy it. Actually, I'm still glad I didn't buy it because it's still under where I would have bought it for. But that's a good back-tested approach with the close under the 50, back over the 50, and staying in it as long as it's above the 50 and getting out when it's under. But nothing there today. IBB, been kind of a crazy chart. When I'm waiting for IBB, I'm waiting for a 530 close here, the blue line crossing over the 50. That's a good back-tested approach, so nothing there. Intel, pretty low. It's tested the third ATR channel twice, haven't formed a V1 or anything there, so nothing on Intel. Russell 2000. Nothing there. I mean, we did have a V1. We have rejected the third ATR channel. That 200 is hanging right above, so I'm going to let that one go. Here's Johnson & Johnson with a nice V1 entry back into the value zone. See how here's day 1, day 2 washes out day 1, and now it looks like it's above day 1's close, and it is back in the channel. And on top of that, MACD is positive, so it's not too bad. It's under the 200-day moving average, so if I do take this, I will take a half position. This was a bummer. Coca-Cola, I was looking at buying this yesterday with this V2. Here's day 1, day 2 washes out day 1, day 3. It closed under day 1. So I did not buy it. It did not trigger at the end of the day. It didn't confirm. And had it, I would have bought this, and this has been a nice day. So those two V2s, one on Coca-Cola and one on Lockheed Martin, both paid off, but didn't have this. So anyway, nothing there now today. Lockheed Martin. We were just talking about Lockheed Martin with Max. This did have a higher low V1 entry here. I didn't take it. It hit essentially its first kind of profit target here, which is the first ATR channel. Closing above this ATR channel will be important here, but nothing there today. It's too high now for me. MasterCard, we have so we either close under the 50 here, that will be my trailing stop, or if we reject the 50 RSI and close back below, that will be my trailing stop, or I run out of shares, one of those three. Merck's doing great. We have that position. Microsoft, higher low V1 close above the 50. It's pretty good, right? Here's day one, day two, day one washes out. Day two washes out day one, closes above day one, and also closes above the 50-day moving average. So that's pretty strong. On the other hand, we're at a 46.83, 46.60 RSI, so I'm a little concerned with how far this can go. So I'm going to let that one go. Netflix, looks like it's making a double bottom here. No bullish divergence. Nike, did buy Nike here, and we got stopped out here. Immediately went back up yesterday. I did not re-enter the trade. We went under the 200-day again today, and now it looks like we might close back above the 200, but I'm still going to let that one go. Philip Morris, rejected the 200 a day. It looks like it's going to trigger a V1 here. It's a 45 RSI. So if I were to buy here, I would have to approach this differently. If I were to buy here, I'd have to approach this as I'm just going to stay in this as above the 200, because if I just discretionarily traded this, 50 is going to be my initial profit target, and it's not a good risk to reward ratio. So let's look at the weekly. All right, I'm just going to let that one go. PayPal had a nice bounce yesterday off from the under the 30 back over the 30, but that's all it had. But it is having a nice day today. Is having a higher low V1 like a lot of the other ones, but I'm just going to let that one go. It's still under the third ATR channel. VIX, I'm sorry. The Qs up nicely again. Again, we have a higher low V1 closing back in the channel. That's a good sign, but nothing there for me. Snap. We moved up higher. We moved into the channel. We moved sideways for a couple days. We had a big day down. If tomorrow we can close above yesterday's close, that would give us a nice V2. So nothing there today, but something to look at. SPY. That's crazy. So nothing on the SPY. We'll buy at that at the end of the day. Sorry. Square still weak, still under the 30. SSO is the double leverage SPY. Nothing there. No. TLT, look at this, guys. This is bonds. Look how freaking high we were today. This is very bearish. We're still up on the day, but if we closed right here, even though we're up from yesterday's close, we're below today's open. This is not all the time, but this is generally a topping pattern. So this might be good for the market, because this is showing that people got really scared. They were moving into defensive and safe assets, and they've been dumping them. So the way I read that is that's going to be positive for the market. Not going to do anything with that. Tesla, nothing really there. Twitter, it's having a good day. V1, but it's above the 1 ATR channel. Natural gas, nothing there. UNH, nothing there. Oil. This is a tough one, because earlier in the day we bounced right at the 30 RSI, and additionally, you see how we tested this previous low way back over here. We went under it and back over it. A lot of volume. This is a tough one. I mean, you still could buy this at a 34. You'd have to use the 30 as your trailing stop. If I did buy this today, this would be a half position because it's under the 200 days. So I am considering buying this because of the bounce off the 30, the nice kangaroo tail back up. We tested this low back here. There's been a lot of buying off of the bottom. My stop would be a close under 30, so 4 points to the downside, 16 points to the upside. So it does kind of make sense there. So I am gonna possibly look at that one. The dollar back in the value zone, moving sidewards. Nothing there right now. VIX, big update earlier and reversal bar today. So nothing there. We did buy VIX here when we had this nice V2 under 30 back over 30. We had a double bottom with the bullish divergence, and this was a great trade. It was a 14% trade for us right up to about here. Verizon, nothing there. Walmart went under the 30 back over the 30. I didn't buy it yesterday. It looks like it would have been a good move, but nothing there now. Energy really doing poorly. XLF, nice bounce off the 200. Nothing there for me. Real estate, wow. Nothing there though. Utilities, right back up. Right back up. Triggered a V1 yesterday. It was against too big of a bar, but nothing there. Healthcare, not looking too shabby either. The only thing, we're at a 40 RSI, 41 RSI. So, you know, the reward portion, you know, the theoretical reward portion is going to be here at about a 50 RSI. So I don't think the risk to reward is that great on this trade. I mean, it did have a V1 back over the 100, but I mean, it's pretty, I mean, it's decent, but again, with this particular trade, I would kind of have to turn this into more of a mechanical trade, keeping it just as long as it's above the 200 days. So we'll mark it, and then pharmaceuticals, not bad. Not bad there. Rejected the had a lower low V1 back over the third ATR channel, but actually I like healthcare better. All right, so we have quite a few here. We're gonna have to narrow them down. Hey Johnny, how you doing? KR helped with my losses this week. What a nice pop. Oh, that's good. I'll look at that after the market closes. And Andy says, crazy day for sure. Hey, Andy, good to see you. All right, so our potentials here are Apple with the, looks, if we close above the high of the gap down day and the closing under the 50 back over the 50, that would be my signal, 198.65. But again, on this one here, you're going to have the 50 RSI issue too. So let's see. Boeing does not look like it's triggering that V1. Facebook, you know, this one gives you a lot more room. You're at 38 up to 50. And, you know, your stop, if you use a 30, is going to be 8. So that does make more sense. The Facebook trade does make more sense. I actually like Google the best so far here. We have a higher low V1, still above the 50 RSI, inside the channel, above the 20 and above the 100. Johnson & Johnson looks like it's failing from that V1 now. Oil I kind of like. So I don't want Apple and Google. I don't want that much tech. But you see what I'm saying here? We're at a 44.51 RSI. So, you know, my theoretical first group of sellers is going to be right here at about the 50. My stop is going to be a close under the 100. We are outside of the channel. It takes a lot of selling pressure to get outside of the -1 and the 1 ATR channel. So there's been more selling pressure. Yeah, I think I'm going to have to go with Google. I think it's the most well-defined risk to reward ratio here. And I don't want to get Apple and Facebook and Google because, you know, then I'm just doubling and tripling up in tech. So all in all, I think Google's the winner here. Higher low V1 close in the channel. Above 50 RSI. So yeah, I'm gonna be buying Google at the end of the day now. So let me just put that order in. All right, so this will be a full position on Google. So I hope that makes sense, you know. Like all the setups are good, but even though the setup's good, then you kind of have to look at your theoretical profit targets and look for the best risk to reward. So Google looks the best for me there. So I'm going to get rid of Apple. I'm going to get rid of Facebook and see if there's anything else we want. Boeing does not at the moment look like, so I'm going to get rid of Boeing. Johnson & Johnson, no. It's not triggering. So you see we have this big kangaroo tail. It's currently right now we are above the open. That is positive. If we had the same structure and it was close, but the close was still below the open, that would be negative. This is now the close. Looks like it's above the open. So this is a possibility for me. Again, it would only be a half position. And then the other one to consider is XLV. So let's look at this. So in the monthly, yeah, you know, I mean, it's kind of moving sideways. In the weekly, we are smack dab in the middle of the value zone. Hold on, everybody. Apologize. Sorry, I'm on my show. Hey, come on. Hi. Yeah, you can mow. Hey. All right, sorry about that. Oh, man. Just at the perfect time, right before the end of the day. Okay, lots of fun. Okay. I think I'm going to let that one go. All right. So I am going to buy Google at the end of the day, and I am going to buy a half position of oil. Sorry about that, guys. The gardener's here and the dogs were throwing a fit. All right. So I am buying a half position of USO. All right. All right. So I have an order in to buy half position USO at the close. I have an order to buy in full position of Google at the close, and the SPY position at the close. Wow, the account went green on the day. Unbelievable. Amazing. That's great. We had a nice comeback day yesterday. Monday was brutal. So let's look at our current positions here. Amazon, yes, we're good with the close above the 250, at least so far. If it can hold for the next 4 minutes. DDM's definitely looking good there. MasterCard, it's looking fine. Merck, about break even there today. SPY, we are going to be buying that at the close. And again, oil, with this bounce off of the 30, looks like we're going to close back up into the channel. And it also tested this previous low here and rejected it. So, you know, we'll see what happens with this one. Then, of course, Google. Google with the higher low V1 close back over yesterday's close, back over the 50 RSI, back over the moving averages. So that all looks good, and it happens in the value zone as well. Wow, did the account go green today nicely? My goodness, amazing. All right. So oil, half position with the rejection of the 30, rejection of the previous low, the close back into the ATR channel, and the good risk to reward from 34 to 50 compared to 34 to 30. So that makes sense. So yeah, looks like we're good. Looks like we're good. Boy, it's really going strong into the close. All right. Steve says, my long guy always shows up when I try to record my video newsletter. We live in a parallel universe. I'm telling you. It's not so much the long guy, but the dogs, because they bark at him. And then, anyway. All right. All right, there's a couple things I want to share, but let's just wait till the market closes. Wow, big green day today. Who would have guessed, right? After a 500-point down day, unbelievable. Unbelievable. So we have about 30 seconds left. Oh, it's coming down a little bit. Coming down a little bit.
Order filled.
All right.
Order cancelled. Order filled.
There we go.
Order filled.
1175.91.
Order cancelled.
1175.91. All right. So that's our entry there. And then on oil, 1084, right at the close. All right. All right, so that's that. So those are our new positions then. We have Amazon. So far, that's a profitable trade. That's good from yesterday. DDM, just under. MasterCard's been a really nice trade for us. Merck, down a little today, but up since we bought it. SPY, oh, where did we get the infamous SPY at? 287.97. 287.97. Oh, we got a good fill on that. 287.97. All right, good. So we're in the money a little bit on that one. Google, we bought that right there at the close. And USO.
Order cancelled.
And we got that right there. So, all right. Well, listen, if anybody has any questions about anything I did today or just any questions in general about trading, please do me a favor. Don't be shy. Just go ahead and type them into the chat and I will do my best to answer them. And then before I get to the answer section, I just want to do quick little plug for me and let everybody know that I do offer private one-on-one coaching and teaching and mentoring lessons in the evening time via Skype. So I've had really good success with my clients. You know, what we do here on the live stream's great, and I hope it's helping everyone. But, you know, the one-on-one lessons actually, there is an advantage to that, mainly because I have you teach everything back to me and I throw all sorts of different situations your way because I want to make sure that you can answer them. That way I'll really know, I will know that you know what you're doing. So my hourly rates and my email are in the description of this video, or you can send me a message on Twitter. But if you've been thinking about it, you know, reach out to me. It generally just starts just with a free phone call or Skype call. I just want to know a little bit more about you, what your trading history has been, what your approaches are, what your challenges are, and really what your goals are. And then I'll put together a customized lesson plan for you based upon what your goals are, how much screen time you have, how much you want to be involved with the market, your financial situation, all that kind of stuff. So if that's of interest, please let me know. You can just reach out to me on by email or through Twitter. And then also, if you like this video today, if you're learning something from this channel, you know, I'd appreciate it if you would subscribe if you haven't subscribed already. And at the very least, if you could hit that thumbs up button, that would really help me, helps get the channel out to more people. And, you know, I started this channel honestly because I wanted to help people. I wanted to help traders with their trading. So many people have a very difficult time. They don't know what they're doing. They don't position size correctly. It has a horrible negative impact on them, both on their financial life, their family life. It's a big deal. So, you know, I feel like if they come to this channel every day, that it's going to help them. And at the very least, it's going to help them lose less money, and who knows, maybe even make some money, right? If they really take to heart what I say. So, and you can help me do all that if you know, share the channel, talk to your trading friends about it, but at the very least, hit the thumbs up button. So, okay, there's my plug. That's all done, and let's go and see if anybody has any questions. So Johnny says, the KR helped with my losses this week with a nice pop. Let's take a look. Whoa, Johnny, you get some of the big moves, man. You've got like the special touch. Good for you. Holy crap, man, that's beautiful. Yeah, when sometimes you'll just have one that really helps mitigate a lot of your losses, and you're like, thank goodness I have that one. Like last week when we had the VIX, right? I mean, that mitigated a lot of the losses, and then it also made a nice amount of money for us as too while the market was going down. Johnny, where did you buy Kroger at, and why did you buy it? Steve says it was Dow Jones 589 point drop at the lows. Unbelievable. Good thing I was asleep. Good thing I was asleep. I mean, my gosh, the volatility has been unbelievable. These overnight drops have just been crazy. I mean, Steve, in your newsletter, you were talking about the night President Trump got elected and how much the futures were down. They were down 1,000 points. I was right in the middle of that. and this is the one and only time this has ever happened. Do you know they actually stopped trading when the futures were like down 1,000 points? I actually bought some right before it stopped trading, and then I went, oh no, because I bought the futures in the evening time because I was watching it, and then they stopped trading. I was like, oh man, this isn't good. And then of course it opened up and it just went up, and that was the low. And so, hopefully this kind of washouts that we've had over the night points to the direction that these are the lows. We'll see, definitely not for sure, but obviously if you're down 500 points and you can rally back, that's a pretty good sign. So Steve, this is Steve's website, newtraderu.com, and I'm going to try to post this here, and sometimes Google or Facebook or come on, Greg, YouTube, they won't let me post it. Oh, there it is. So there's the link. Steve has such a good website. He posts, he has weekly newsletters. He has some trading courses. I've taken all of these. These are really great. But this particular article is about the RSI indicator explained. J. Wells Wilder developed some of the most popular indicators used today. ATR, which I use, ADX, average directional index. I don't use that, but I know what it is, and RSI, which I use all the time. So this is a really nice article. Click on that link, take a look, and understand kind of the math and understand why we use these indicators in our trading. But Steve has some great courses in here. He has just normal, regular articles that you can just go and read. And I would suggest doing that. These are all free. These are great articles. Spend a day or spend a weekend and go through all these and take a look. So it's very, very helpful. Steve says, I saw the 1,000-point crash that night. Yeah, that was insane. Johnny says, I purchased KR as a value investment, but then it spiked up too much today to keep it. I will likely buy it back after dip. Okay, good for you. So you just had it here, kind of back here when it was just moving sideways as a value. Boy, did they have news or what happened? Look at this nice big base, and boy, did it bounce off of the base. Brian says, oh, dang, I need to check that out. Yes, Brian, you especially need to check that out. newtraderu.com. This is Steve's website. But read all these articles. Steve says, Wells Wilder's book is like the Bible of technical indicators. Yep. A lot of how we trade has to do with this man right here with Wells Wilder's book. All right. So, does anyone else have any other questions today? Okay. Well, Steve Burns, thank you for coming. I appreciate it as always, my friend. It's always an honor to have you here. Brian, 512, thanks for coming. I hope you're learning something from this. If you have any questions, please let me know. Johnny, good to see you. I'm glad that Kroger trade worked out well for you. Nice going. Andy, good to see you, my friend. Hope you're doing well. Max B, good call on Lockheed Martin, and thank you for coming by. Hi, Frederick. Good to see you, my friend from France. Murat, good to see you. Thank you for coming as always. So if no one else has any questions, then I'm going to go back to bed and hopefully feel better by tomorrow. So thanks for sticking with me through the dogs and through my coughing and through my flu, all that kind of stuff. So Anyway, we did have a green day today, which is pretty amazing when it comes down to it. So, all right. Well, thanks again, everybody. I appreciate it. Hopefully, we'll see you tomorrow during the last hour of the day, and hopefully, we won't have any more 500-point crashes over the evening. So, all right. Well, have a good day. Go out, do something nice for somebody today, as always. All right? All right. Thanks, everybody. Hey, there's John. Good to see you, John. Thanks for coming by and saying hi there at the end. So, all right. I'm going back to bed. So, have a good rest of your day, and hope to see you guys tomorrow. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.